All right, welcome everyone to today's stream. I'm just going to be doing a very chill research with me, work with me type stream. Last time where I left off, I was writing a weekly recap post of the top 5 ideas for this week. But this is just a continuation of that. This is me completing um, the research for the rest of the stocks. Of course, this is more of a brief research, and then that way I can upload it into my Substack. Yeah, if you're a new viewer here, new subscriber here, please subscribe, support the channel. The YouTube algorithm is made in a way where if you have less than 1,000 subscribers, I can't even get monetized, and the algorithm doesn't really work with me, kind of works against me. So it's very hard to get discovered. If you enjoy this content, you find it valuable, please give me a subscribe. It would be very helpful. And just to update you guys, yeah, good news for my channel is that we have hit 265 subscribers. Around a week ago, I was only at 125, and I've been getting some traction, which has been very nice. So we've gone to 265. My goal is to get to 1,000. This weekly goal, it was to get to 300 subscribers by the end of by basically June 22nd. So we've accomplished 65% of our goal. So if you're a new subscriber here, please subscribe. And if you have any friends or colleagues who might be interested in this type of content, please share it with them. That'd be great. Yeah, we're just going to be continuing doing research. Last time we did went over Wantedly, and then we were able to go over Nihon Falcom, and then we were going through the research on Trial Holdings, and then we didn't quite have as much time, or the opportunity didn't look as great as it could be. So I'm going to do more research to determine if that's the case. I think it needs more time and attention than what I have for this stream. But we have other candidates. We can look at 4380, 5570, and 1450. So that's what we're going to be doing in this stream. So Leonard, okay, says, can you share your top ideas? Haha. My top ideas. So the problem with that is that a lot of them have gone up since April. I had some really good ideas on if you guys on my Twitter. So if we go to my Twitter, go to my highlights. Yeah, there's a post that really basically summarizes it, right? So in April, when the market tanked in the Japanese stock market, I gave some projections as to what companies I thought would do quite well, and 5 to 6 of them worked really well, and the only one that didn't do well was Genda, but this is not even a stock that I've researched myself personally. The other 5 are stocks that I have actually gone over and done research on. And as you guys can see, like, the returns have been quite amazing. It's actually, some of these have gone up even further now. Genda continues to go down. I haven't kept up with the story, so I'd say don't even consider Genda. But yeah, so stocks that I've done research on, for example, Round One, SK Japan, For You, Glory, which is my most recent stock pitch. A lot of them have already increased to a level where I wouldn't say that they're extremely undervalued at this point in time. It's more like if you were able to get in April, then you got a very good price, and you should have no problem either holding it or also taking some profit. I think is a good idea. So right now, what I'm doing is identifying what is my next best idea. So my research process takes quite a while. It's not something I can do in a week. I like to let the ideas marinate, and so what's nice about this live streaming and doing the Japanese company handbook challenge is that I'm able to do, like, the first week of every month, do some idea gen content or generate ideas, and then from the idea gen content, I will pick the stocks that I believe have the most promise and actually do more research into them. And so and those could potentially become my that month's stock pitch, for example. I hope that answers your question. But no, currently I don't have stocks that I think have, like really high upside, because a lot of stocks that I did like have gone up quite a bit. Sorry if that's a boring answer, but you know, right now Wantedly is showing quite a bit of promise. If it can drop down to like anywhere like 1,000 yen, 1,100 yen, I think that's a really good entry price for the stock, given they're so profitable and they have such high upside, and they don't have to spend much on capex to generate their earnings. So it can be a huge beneficiary of operating leverage, and I see good things about Wantedly. Yeah. Another tailwind I realized for Wantedly is that they cater more to a younger generation, right? And the younger generation are going to be the ones that are going to be entering the workforce over time, right? They have a lot of their clients are between between the ages of graduating college, which is 22, up to until 40, right? So even 10 years from now, 20 years from now, that group of people are going to move up and replace the 40 to 60s in year old age bracket. And so I see it as a tailwind, in that the younger generation entering the workforce will allow their usership to go up, right? Because these people are more tech savvy. These people have certain values, right? And wanting to, learn more about their employer besides just text, right? And so, yeah, I see good things happening to Wantedly, even though their revenue growth or usership growth is slower than I would like. Even if we follow this pace, I think some good things can happen with this company. Yeah, okay, so next company I'm going to look at is 4380. So okay, 4380 Mart. Right, last time I think on stream, we identified that Mart, their investor relation link doesn't. They still doesn't work. Okay. That's the case, I might have to just change the titling of this thing to just top ideas. Issue on live streaming top stock ideas instead of top 5. Top 5 would sound better, but I could based off of my just surface level analysis. Yeah, I can do that. We can do 4380. So we're gonna do 0. Hello, pet stove. What is working? What is working? And we have 3 concurrent viewers. Nice. Thanks for joining. Who's the other third person? Who's the third person who hasn't spoken up? No pressure to engage. No pressure to engage. I'm just kidding. So what is let's see, what is Mart's price today? Mart is 4380. Wow. Wow. Okay. Well then. It's up 6.7% today. Interesting. 1400. Yeah, today. Wow. Okay, let's see how that adjusts the valuation of Mart. Of course, the day's not over, right? The trading day is still going on in Japan currently right now. I did not have a thing. Oh, really? I don't have anything for 4380. Okay. Then I will create one. That's okay. We'll create one. I thought I did. Okay, that's fine. We'll do this one from scratch. Our page is working? How come it didn't work for me? Oh, okay. Wait, hold on. That's not Mart though. Mart's not working. You mean sorry, you mean Mart or Trail Holdings? Trail Holdings IR page has always been working. Into this. Hey, do you have a link to their just IR library? Maybe it's if you can send me a link of a different portion, like a website or a tab, let's say that's not the exact investor relations link. Could you send that to me in the chat? That would help a lot, Pelt. Thank you in advance, Pelt Stove. That's so strange. Okay, I will continue. Mart, ticker 4380. Last quarter, I believe I have their financials downloaded. Yeah. So we have their securities report, and then we also have their quarter. Let me just double check Buffett code to see what their latest quarter. Those are updated. Corporate website. Oh, still doesn't work. Most recent is Q3. Wait, but it's already June. How come? Strange. Hold on. This seems to be their most recent. All right, Q4. Let me just double check. Okay, most recent quarter is their fiscal year. Like, this is 950, right? So if this came out 949, yeah, this is too far back. So they don't have their annual? Weird. Iron document. Oh, they have these. Oh, they have these timely disclosures. Okay, I might be able to use this. May be able to use. Yeah, this is the most recent one. Business plans and future growth. Okay, we have an IR. Nice. Cool. Awesome. Matters concerning controlling shareholders. Let's see if we can Google lenses. Can I translate that? Status of implementation of measures to protect minority shareholders when conducting transactions with controlling shareholders in principle. The company's policy is not to conduct transactions. However, if the company conducts transactions with controlling shareholders, the company will pay particular attention to whether the transaction in question will undermine the status of the company's management, whether the transaction in question is valid in light of reasonable profit judgment, and whether the terms of the transaction are appropriate compared to transactions with other third parties, and will proceed after resolution. What's this in relation to? Matters controlling shareholders. Details regarding our controlling shareholders are as follows. I'm able to translate all this. So this is his name. This person is Fumio Murahashi. Fumio Murahashi M. Marts. The information on this. Founded, president, and okay, director. Okay, got it. What is? I should probably zoom in. Actually, it's okay. What's this? Ownership. All decision-making powers are divided. Direct all divisions. Mints to be added up. Actual transaction. The financial instruments exchange for the stocks to be issued or listed. Name and parent company, controlling shareholder, and other related companies. Is that a percentage ownership? It might be. Let me search up Sumio here. %30.52%. Okay, so 30.52%, and the document stated something along. Okay, that's that. So I think this means direct ownership, right? I think that's what that means. What does this mean? I don't think that's actually what that means. Chat GPT that real quick. Amount subject to aggregation. Portion subject to totalization. Yeah, I'm gonna convert this real quick. Okay, so potentially under other holding companies that this person owns, they own another. So directly they own 30.52%, but then maybe other trusts or whatever they own 25. So then they have a controlling interest in the company. Is essentially what's being said. I believe interpretation is correct. I'm gonna quickly translate this. Oh, I'm gonna look back in the chat. Did we get link? Tell it so. Were you able to find me a link, or I don't think I actually need it because that'd be a nice look at it, but I currently do have the IR now, so I'm able to use that. Nice. Matters? Okay. Let's read this. 25th period ending January 2025. Matters related to business plans and growth potential. Company profile, business model. Okay. Okay, so what's the business? So they have Mart, e-commerce site for commercial ingredients and food. I think that's a founding concept for the company. BNet, a comprehensive trading site for commercial tableware, kitchen equipment, supplies, etc. In addition, we operate distinctive websites, wholesale and instant sale outlet market for commercial use food ingredients. Solkan, commercial outlet market, non-foodstuffs. Raptor, commercial flea market site. Oh, that's interesting. So the idea that I talked about before was actually incorporated already. They're doing a commercial flea market. Interesting. Internet big site, advertising site exclusively for businesses, a site where sellers bid on product requests from buyers who want to buy. Wow, they're run by 73 people. History, establish a reputation as a business site where you can buy high quality products at low prices. With Mart and BNet at the core, we have created a virtuous cycle in which buyers gather and sellers open stores. Creative market, outlet market, large transaction market, commercial free markets, and one after another to delve deeper into customer needs. So in the year 2000, they opened Mart. 2003, kitchen equipment and tableware. 2008, BNet outlet, looks like. Oh no, food outlet market. 2008, there's 2009, BNet outlet market. 2016, bulk purchase corner. 17, Central American auction open. Non-standard rice. 2020, listed on the Tokyo Stock Exchange Mothers, currently in the growth market. 21, wholesale website for individuals and households, Seajoy, opened. Measures to secure liquidity to continue business. 2022, they have several months, so this could be several things. So online wholesale auction opened. I want to buy bidding system opened. Commercial flea market open. 2023, enhancement of continuous one-click ordering function with AI ChatGPT tools put into practice. Multiple lot sales started. Newbie auction begins. Baruru, sales and collection. So they've continued to increase their revenues. Good. Okay, cool. The number of companies that they served in 2014 was 57,000. 17 is over 100,000. 2019, 150,000. So 2 years increased by 50%. And then over a 4-year time frame, over 200,000. So get another 50K, but that took 4 years. Okay, and then over 2 years-ish, they only grew 27,000. So the growth rate in number of companies, they've kind of max. Seems like the return on that, but the number of companies is increasing at a decreasing rate, essentially. Worth noting. So then the question becomes, how do they, I guess a couple things. How do they add more companies? Or have they kind of just reached the maximum potential of that, right? And then how do they reach, is it possible for them to expand horizontally? Meaning, are there other closely more related items, that they could sell. So, they do food and beverage, they do tableware, kitchenware. What are some supplementary products or services where they can create a marketplace, a buy sell marketplace for? Let me think. So if I were to think about it, potentially something like so restaurants, they require, handymen to help them sometimes, right? Let's say there's electrical repairs, right? So let's say you need some plumbing done, you need some electrical work done, you need some interior design, interior renovations, right? Potentially they can start a market for that. That's just an idea that came up to my head. Business model and sources of competitiveness. Okay, this graph is hard to look at, but I can use the Japanese version and cross compare. Okay, so page 6 we're on. So we're saying sale form, opening a store. Oh, they're looking at fees. Okay, so yeah, when they open a store, they have to pay some fees. And this is a fixed fee. This is in Mandarin is, well, Canto is guding, means fixed. Use cost, so fixed fee, and then probably variable cost to utilize it. And then the rate at which they charge is 2%. And then, okay, yeah, so usage fee, so market system fee has a usage fee of 2%. Booth fee is a fixed amount, regardless. Interesting. The thing that they're selling is opening a store. So when a seller opens a store, they pay a booth fee, and then on sales that they generate, there's a usage fee of 2% off of revenue. Buyer, there's only postage fee. There's no usage fee, but there's a postage fee. So they pay for shipping, I think is what it means. BNet, which was I believe is tableware, kitchenware, that kind of stuff. There's no booth fee, but then there's a usage fee of some X amount. So maybe this is variable depending on the bargaining power of the seller on BNet, potentially. And then there's wholesale. Wholesale spot sales listing. So there's product. I mean, product. I am still selling. Produced. That tells me there's no fee. There's no fixed store fee, but there is a variable cost of. And what is this? Wholesale spot sale. 12% fee. Oh. Sokan. Dokuhan. Dokuhan. Okay. I don't really know what this is for though. Transaction price. Oh, and then for the wholesale selling, they also need to, buyers have to pay a some type of fee, and then delivery fee. Interesting. Seller's booth fee. 35,000 maximum MR. Also, they have a maximum plan and a basic plan. So if you're a small vendor and you're a big vendor, it's a different thing. Booth fee is 35,000 within 100 to 300 items. Okay. And then maximum plan is, well, 35,000 yen is 350 bucks, and then 310,000 is like $3,100. USD wise, it's like around 2,000, 2,000 something. And then booth fee would be around $200, 200 something, like $220. That ENET. ENET, if you have less than 10,000 items, is only 1.3. I wonder why. Digital platform maker specialized in providing a place for transactions for business, specialized stock business, information stock. 230,000 companies utilizing customer information, transaction data, and network. The flywheel effect, a system that naturally attracts buyers, established 230,000 buyer members, sellers gather. So they have created a really strong marketplace. Win-win-win. The idea behind good sellers, good for sellers, good for buyers, good for society. Okay, so some sellers will use their website as a company homepage. So instead of establishing a website, they're just using that instead, which is interesting. Physical store, it is possible to reduce sales personnel and management costs while expanding sales channels and increasing sales and profits online. Posted on the site 24 hours a day, advertising effects, sales outside business hours, plus excellent UX plus UI for order and inventory management. Buyer, we purchase high quality products from a wide range of products at low prices when you need them and in the quantities you need without restrictions such as trade area or commercial rights. No need to lock in customers. Direct transactions possible after matching. Behind every site transaction, there are about 20 to 50 times as many direct transactions. With the belief that they may grow together with the industry and the consideration of nature of trade with continuous purchasing, sellers continue to open stores in order to develop new buyers. Even with low usage fees and direct transactions allowed, our company continues to grow with a steady increase in members and high repeat rate. That's good. Source of strength, management. Founding president's long and solid industry experience and knowledge. We continue to educate and enlighten management, employees, and business partners. Timely and accurately identify the various needs of sellers and buyers and provide detailed matching. Quickly launch new markets and services, sales advisors. Development aspect. Thorough implementing in-house development of the website, renovate your site or open new markets. Is there an M market site? What? I wonder if it's a location-based thing. So if you're outside of Japan, you can't look at it. Is that the case? Maybe if you are in Japan, you're able to see it, but if you're not from Japan, you can't see it. Is that going on here? Crap, I don't have a VPN. I think that's what's going on exactly right now. Yeah, there should be no reason why I can't view it. Oh. Crap. Oh, I think if I change it to Japanese, I'll be able to see it. That's a load of crap. Okay, nice. So they have their competition on here, which is really nice. They have some of the highest margins, which is great. Love to see that. How come the restaurant ones are pretty high in terms of margins? So Synchro Food specialized for restaurants, information site management. Oh, they have more sales, higher margins, slightly lower margins, but more margins. Interesting. Corporate arrangements for ingredients and specialized for restaurants. Interesting. Sales growth rate 23%, growing at a higher rate too. Oh, Synchro Food might be something I have to look at. Total asset growth rate, really high. Wow. Okay. The sales growth rate grew at, double the pace of MR, yet they have more sales, more operating profit, more assets. We should take a look at that right now. 3963. Synchro Food. Food has done very well since earlier this year. April dropped to 42. Description. Synchro Food operates various media platforms for the food and beverage industry. Its platforms include Rakuten.com, a support site for opening and operation of restaurant. Jobs at Restaurant.com, a restaurant job information site. Jobs at Interior Design, a job search site for interior design. StoreDesign.com, a matching site for store design companies. Ryokuten.com, unoccupied sales, appraisal site for unoccupied stores, and Mobimoru, a kitchen car share matching site. Kitchen car share. Okay, so this might be just kitchen sharing. The idea of kitchen sharing, because sometimes, like, let's say you have a dim sum restaurant and you only need the restaurant serve dim sum for the morning and afternoon session, and you don't do dinner sales, and you can rent out the restaurant Sasa kitchen for the evening and then do your sales that way. Yeah. Interesting. Look at this company. Actually, what's the valuation real quick? Oh, quite nice. Quite nice. COVID affected it, which makes sense. This is food industry. High gross profit. SG&A has been dropping. Good. Income margins increased. Net income margin is still very healthy. Oh, pretty good ROIC too. Enterprise doesn't look too expensive. They have a lot of cash. Cash is piling. Give 20 times. Has been higher though. He has been. Okay, so 16 times 7.2. Okay. David, how's revenue done? Nice, it doubled in basically 3 years. Stopped a little, they stagnant a little, and then resurfaced, and then grown quite a bit. So that's good. Yeah, low DNA. So this is a website company, right? Low capex. I like this. Okay, good. That's why their margins are pretty good. Okay, I want to add this onto the list of potential companies we can look at. 3963. I think we might as well do a quick screen of it. Well, I have it here. $3,963. Synchro Foods Company. Probably don't have it in English. Probably not. Briefing video. Oh wow. Okay. 19 subscribers. Actually, I'm curious how many views that video has. 144 views. Interesting. Okay, we can download that and have a look. Okay, let's quickly finish this. And like, okay, so this is probably the latest. Placed on April 25th. Just quickly translating the financial statement. Okay, we can get the calculating now. This latest quarter is fiscal year, I guess Q4, you could say. Fiscal year 2025. Share price of Mnet. $390. Yeah, almost 7 billion. No other investments short term. Deposit guarantee. Deposit guarantee can honestly just be money they set aside for like rent, like security deposits. Yeah, such a negligible amount. That's debt. I don't think deposit is debt. Yeah, nothing here. Okay. Dividend yield. 1.8%. 25 yen per share. Intangibles. We don't know what current liabilities are, but we do know. Or do we? It's mainly just total current liabilities. Oh, sorry. Total. Oh, there's current liability. Liability. That's the same thing. Okay, forecast period. Continued growth is good. Ignore the free cash flow calculation. Wait, hold on. They're that, so they don't really have that much. Look at the. Actually, there should be a cash flow here. Barely depreciation. Barely. Expenditures for time deposit. Like, is that is that just investing? Like, take a quick look at it right now. Expenditures for time deposits. Expenditures for acquisition of tangible fixed costs. So yeah, this is pretty low. Honestly, rather negligible. But like their capex is like barely. 73 now? 3 now? How did I get to that? That doesn't like it's right. Ah, thanks for noting that. I am looking at 4380. Change that real quick. Thank you, Gary. Pointing that out. Yeah, if you look at the bottom part of the screen, the ticker is there. I might as well add that the name of the company. Hey Gary, if you haven't subscribed, please subscribe. You're welcome. Amortization of goodwill. See that in there. Yes, go Gary. Thanks for the sub, Gary. Okay, I'm gonna quickly look at Buffett code. See what they. It's very strange to me that the thing doesn't. Yeah, it's really low. How did Koyfin get those numbers? I'm really curious how they got those numbers. Purchase fixed assets. Yeah, it's low as heck. Like a marginal amount. I don't even know if this is relevant, right? So we can assume 30% tax rate. We can say 333, and then we also capex of 333. Like, yeah, correct. Based on the formulas, and then we're just making these assumptions. Okay, 20 times PE, 17 times. Enterprise value basis is, I wouldn't say insanely cheap. So this is a growth company, but then the question is how will they grow, right? It seems like the amount of companies that they can add on have been stagnated. The question becomes, are there other segments or other websites? Are those growth drivers, right? So let's quickly look back at the translated IR, see if we can determine that. Source of strength. Founding president's long and solid industry experience and knowledge. We continue to educate and enlighten management, employees, and business partners. Timely. So, in the last stream, one viewer said that the CEO of this or the president of this company is a kind of a dictator, and that they run it with absolute, yeah, and he implied that if the president were to step down, then the company could probably grow better. I don't have that insight yet. Timely and accurate to identify the various needs of sellers and buyers and provide detailed matching. Quick launch new markets and services. Sales advisors provide sales promotion support and consulting. Development aspect. thoroughly implementing in-house development of the website. Renovate your site or open new markets in an agile and low-cost manner. Financial aspects: have nots and advanced payment, high profitability, and good financial standing. Stocks are kept outside the company, complete lack of ownership, no inventory, no equipment, cloud-based server, no borrowing. Buyer must transfer payment to us before shipping the product. M-Coin, credit card, bank transfer. After delivery, we will transfer the payment to the seller, middle person. It will complement the buyer's credit worthiness and contribute to our finances. Cash flow, bad debt risk. Competition. Restaurant ordering system. Much bigger in scale. Lower in profit though. Way different cost structure here. This is like it's almost 6-7% operating profit margin. Employees. Synchro Foods looks interesting. User support link for the fresh fruit and vegetable industry. Wow. This fresh fruit, but then the ordering profit here is really bad. So 3%. Very good. 9% clothing and accessory business. Okay, trends and breakdown of operating revenues. Largest market Mart is steadily increasing its sales. The increase in the first year store opening fee last year also contributed to the increase. Okay, so they have some pricing power. They're able to increase the cost at the storefront. Sokuhan, leverage to accelerate growth, renew site UX UI database support for sellers. Early sales. Beanut is orange. And Mart. Other. PCs. Soku. Exactly. That. I think they named it differently earlier too. Commercial outlet market, non-food stuff. Commercial outlet. The lean production. Isn't this exactly the same as Nihon Falcon? They also have 66. Yeah, employees. I think that's kind of funny. Sales by market, sales by format. So this is from fixed fee, right? Fixed fee, and then this is for the variable profit margin that they generate from sales, just commission basically, and other. Characteristics and trends of operating expense. No inventory, stock assets held, variable costs are proportional to sales are minimal. Maintain high profit margins. Personnel costs, sales, system technology account for 67% of operating expenses. And expenses are mainly fixed costs, office rents. Operating expenses have increased with growth, but as the percentage of sales, both labor costs and overhead costs are on a downward trend. Employees haven't fluctuated much. Very lean production. Sales per person. Characteristics of the balance sheet. Net asset ratio, no debt, 83% of assets are cash, no inventory of cash flow. Operating cash flow increases year by year in line with profit growth. Working capital inflow. Investment cash flow, transfer of funds for fixed deposits and system investment. Okay. Mainly dividend payments and no borrowing. business plan. Domestic fundamentals. Population decline accelerates and business closures and bankruptcies on the rise. Distribution industry pie is shrinking with the burden falling on small and medium-sized businesses. Even maintaining sales is becoming more and more difficult. Labor shortage is becoming more serious. Labor saving and productivity improvement are important issues. For internet businesses with the ability to attract customers, tailwind. Current state of distribution wholesale industry. According to 2023 survey by the Ministry of Economy, Trade and Industry, the wholesale industry B2B will have an online transaction volume of 121 trillion yen. The EC conversion rate is 37.5%. This includes EDI transactions of major PMs, which account for a large portion of the transaction. Small and medium-sized wholesalers who are our main field are still in progress of migrating to the internet, not progressing. On the other hand, while the industry's distribution system is stagnating, online transactions are becoming more common. More companies are finding new ways forward. Many cases of successful sales expansion at Mart and Gratitude. Current status of our company: room for organic growth and more, given the current state of industry. Customer stock is accumulating 230,000 companies. New member registration. The momentum continues with the flywheel effect, virtuous cycle, accelerating growth. I would like to know how many users I have. Do we have user data? Well, okay. Data-driven management. Thoroughly utilize the customer stock and data accumulated within company's founding. Strengthening support and consulting activities for store operators using data. When launch of Sapokai, March 2023. Collaborate with exhibitors and grow together. Cultivate distinctive new markets. That's what I want. Raptor. Support market discrimination and efficiently manage transactions. I don't think that's exactly what they meant, but okay. Promote investment in human resources system. Hiring a specialist and retraining employees. Digital marketing, and IT. Continue to improve UX UI. Creating a place where it's easy to sell by these investments aim to expand business. Initiatives. Find data-driven management. I think improving the UX UI is important for sure. Fleet renewal of BNet. Okay. Practical application of AI. Listing and promotion. We really website. Product description, presentation photos, recommended recipes, and country-specific recipes. Is one-click ordering. Is this an Amazon thing though? Cultivate distinctive new markets. Country market. Establishment of M-Mark selection. February. Establishment of fisheries and agricultural cooperative market. Continue holding of the event. Crash Price Week. Introduction of new markets and sales formats. Started handling new markets by purchasing products in-house and providing products. Sales and collection industry. So number of companies, that's good. Number of participating, changes in number of sellers. Number of buyers, 227,000. Okay. Number of sellers is only 2,000. But in 1 year, we increased 400. So slow, and then fast. Employee count is kind of low. Persons increasing, which is good. Average and annual average number of employees. Okay, operating revenue. I see, so, they surpassed their revenue forecast, but then underperformed a little bit in operating profit, which is fine. Or underperformed a little bit, which is fine. Overall, still good. Probable effect of creating a virtuous cycle continued. Number of buyers increased by 5.8% from other terms. Number of seller companies increased 9.1%. That's also really good. Mainly in the M-Mart market. Total distribution amount 13 billion yen. Operating revenue. M-Mart market ingredients and food is driving performance. Opening of new markets also contributed to increased sales. Operating expenses. Increase in personnel recruitment costs. Advertising expenses. Their uptrend in profit margins from 17% to 46%. Next term plan. Wow, 43% operating profit margin. 8%. 1 times. M-Mart market continues to drive growth. Use of function of selling multiple lots and continues one-click ordering. Aim for revival of the BNet market. Human resource investment, strengthening sales promotion, and website UI and UX. Expand and trade by creating new markets and new functions. Raptor. Operating expenses, SG&A increase 8%. Investment into human resources, factor in labor cost expenses, but factor in recruitment costs and overhead expenses. No major items for operating profit. Okay. Dividend policy. 21 yen, dividend payout ratio of 30%. Okay, so they can probably dish out like 70 yen per share. And the stock is... That's not the stock. Oops. And more. 70 on that is close to 20, almost. 18, 19, something like that. Oh man, you're testing my Japanese here, Palisto. Jesus. What was that one? Damn it. It's been like literally, I want to say 9 months, and I looked at hiragana. Think about this one. Is that basically sorry, but sari? And let's see. Let's see. Also, oh, mata. Oh, yeah, I totally forgot all my Japanese now. I need to review my hiragana completely. Oh shit. Wait, so the stock went up literally 7% before their earnings was coming out. Is that what you're telling me? Jesus Christ. Isn't that kind of is that insider trading type of shit then, basically, potentially? Man. Should I buy 100 shares just for fun? If I were to assume the moat for MR, I still don't know enough about the company. Let's be real here, right? If I were to assume the specialized for restaurants, I have to look into Synchro Food to actually compare it to actually give a sense. But for them to have this type of margin here, it must mean that they are the go-to site, even though it's for this type of niche. They're like the go-to site for essentially the 230 something thousand businesses and companies of buyers and 2,000 sellers, right? So they're the go-to for that potentially. So it's like a first mover advantage type thing, right? The question is, sure, there could be a competitor that builds a competing platform and try to take it, but like if everyone's used to using this, and if you've already paid a fixed fee for a new store, for example, and if you're a seller, right? Because sellers pay for a fixed fee for a storefront, a virtual storefront, and all your customers are used to using this. I don't think that there's like a second location, right? I mean, there could be, but it's less likely. What is a real life corollary to this? Potentially, this is all speculation, by the way. Don't take this with a certain grain of salt. Tsukiji Fish Market in Tokyo, right? There only needs to be one Tsukiji Fish Market, right? Because that's where all the people go to do the bidding, and then once the vendors bid for the product, and then they take it to their stall, and then they sell it to the restaurants, right? So you have wholesale, the auctions and bidding, and then you have the B2B business from the person who got the tuna, the fatty tuna, bluefin tuna, for example, right? So you bid on the bluefin tuna, you get it, you cut it up into portions, and you sell it to the restaurant owners, right? So that's one location where everyone goes to, and then now it's changed to Toyosu Market, I believe. Not Tsukiji now, it's called Toyosu Market, or starts with T. But there only needs to be one. And I think the same dynamic happening online is similar to this one, right? Like, I don't think that these vendors, these buyers are the most, technologically inclined. So then, they could be a young vendor, right? But from documentaries I watch, or videos I watch, it's kind of young generations don't really get into this field that often, right? In terms of the sellers. So yeah, I think if you establish your niche, so it seems like they dominate this niche, is probably the moat. Okay, risks. Okay, about the e-marketplace business. Overall, electronic commerce market is expected to continue to expand. However, in the future, our business partners may launch their own websites. Very true. Causing a sharp decline in the number of buyers and sellers for our company, which could have an impact on our business performance and financial position. So this is very true. So if you are like, let's say you're a bluefin tuna farm, right? Like you farm bluefin tuna, and you create your own website, then they can bypass this company altogether and create their own thing. Meet various needs depending on the size of the buyer. To meet these needs, we will improve and strengthen our services, further increase the number of buyer members, differentiation in terms of price and trade items, establishment of digital marketing department. I would think though, because they have like this network created already, like if I was a fish market though, if I was a fish farm, for example, right, I would still keep up my virtual storefront regardless, right? Because there will be new restaurant owners all the time, because restaurant is one of the easiest businesses to go bankrupt in, right? A high failure rate business restaurants. And so there's going to be new entrants into the market, and you need to be, even just for marketing purposes, you need to be available to get the eyeballs on your business when these new entrants come in, right? So You know, I wouldn't just simply bypass, and create my own website, right? Unless I get so much business that I don't need new customers, right? Which is rare. Regarding competition, in the future, new competitors offering revolutionary services may enter the B2B marketplace business. Yes, Amazon can do this, which is centered on food ingredients, causing a sharp decline in number of sellers and buyers for a company, which could have an adverse effect. Another question is, why don't they just buy them out? Right? Why not just buy them out? Increase and strengthen system personnel who are resistant to technological innovation, establishing of the digital market department, improving services to meet various needs. Discrimination in terms of price, products traded. Yeah, so ensuring that their UX and UI are the top, just the user experience, everything is just top notch, which is a defensive strategy for sure. Security risk, there's always, yeah, that kind of stuff. The session, right? Yeah, reduce reliance on the CEO. So who's the next person that's gonna come up? Give me a second, guys. I'm just looking at my portfolio. Now I wish I bought some Edmart. I could have bought some just as a starting position, just for fun, right? Doing today. One, 3, 1, 2. Oh, same price. This is not investment advice, but sometimes if I have extra cash in my portfolio, I don't mind having a starter position because it motivates me to want to learn more about a company. I think Lilu does that as well. What sucks is MR went up so much today. I wouldn't mind buying a little bit just for fun. And if the earnings comes out really good, right? It just skyrocket, but it could also tank the stock. I guess if it tanks, that'll be even better for me to buy. Who knows? What's the bulletin board saying? Why are people buying this up? So another thing you can look at, but these are retail investors having discussions on stocks. I just like looking at to see what they're saying. Sometimes it's funny, sometimes it's like to take with a grain of salt what they're saying, but just this is sometimes worthwhile to just look at to see what retail investors are thinking. So not much discussion recently. 4th, today, June 15th. No one said anything. Decent volume. This looks kind of sketchy. Why would you go up 7% before earnings even? Yeah. Let's just call it 1400 per share right now. Then the price that we're using, I just use 1402. Just use their price. It's okay. It was during the day. Today is June 15th. Still June 15th, where I'm at right now. Because in Japan it's June 16th, I guess. Cap 6.9 billion to say. Net cash 2.2. Enterprise value 6. Price of book 3.8. I suspect sales department manager Nobushige Murahashi will be CEO. He's a son. Okay. Thanks for that information, Pellet Stove. Yeah, if the founder owns, 50%, then through direct and indirect means, then very likely the heir to the CEO is going to be a family member in Japan, typically. Doesn't have to be that case, honestly, though. Okay, so this should be fiscal 2026 is what the next 12 months is going to be. So 7.5, 17 times. Okay. Highly profitable. Same trend. Let's quickly SG&A margins have been going up. I don't see a problem with paying more for UX and UI design and ensuring the website is competitive. Pretty operating leverage. Okay. They've even experienced operating leverage. Great. I'm just gonna copy some of my formatting from 40%. I use rounded numbers, I don't 7%. Operating leverage. I think what's worth mentioning is I think operating leverage will be really strong for this company because it's still growing. It has 66 employees, right? That's unlikely to change unless they want to revamp and create something else. But essentially, they're already past the break even point quite substantially, right? And they're still growing. It's not that they're not growing. So the number of buyers is at 240K or something like that, right? And it's grown, although slower. Every additional member that pays for a storefront now basically drops complete to the bottom line. That's what we're probably going to see, right? So like the hosting services, the payment for cloud computing or data storage or whatever is, they're not going to need a much bigger office to do what they're going to do. They're not going to need, better computers to do what they're going to do. Yeah. So any new additional members that join into their, sellers, that go into the platform, it's just going to be completely going to the bottom line, majority of it. Yeah. So that's why it's so strong. Hey, Pellet Stove, do you know anything about Synchro Foods? Because they are listed as competitor and their margins are pretty healthy too. I'm gonna look at Synchro Foods in a bit, but yeah, this looks like specialized for restaurants, especially like that looks. There's a sellers and buyers thing. 227,000. This is a 230K. And I think okay. Buyers, sellers part should be a little bit 2,100. Some percent increase. That's over 10%. This is really low, but this is from COVID. Sellers. Oh, how did sellers increase so substantially? This is actually really good though. That happens. Haven't heard about them. Okay, fair. This is a really good development because it's sellers who pay for the service, right? Not buyers. Hmm. And what the trajectory on this is, right? 6362. Fish market. Someone went for Fuderson. Interesting. I'll note that down. Put it. We'll take a look at that. Yeah, who are the competitors that have created a competing product? And what is preventing them taking market share from Mart? What's the two thing? Did they say number? The number of participating companies has been reduced due to the difficulty of accurately determining the number of companies withdrawing from the auctions. What do I not like? How much are they spending on marketing? I wonder. Majority controlled by one person. Unlikely to be bought out. Tsuko Murahashi, Nobushige Murahashi, Atsuko. Yeah, how can a company effectively allocate cash? I'm just gonna look at the revenue breakdown, see what I see. One breakdown. Wow. Yeah, you have all these different products, right? That generate revenue, and you're telling me, okay, MR, net, wholesale and spot sales, Silicon, others. Increase, decrease, so they're putting more, allocating more capital into ensuring those fields as well. I don't know what the other ones are. Okay, some breakdown. And Mart is still the cream of the crop. I'm just reviewing the business content or the business overview, let's say, just to see if I missed anything. Oops. So essentially, this is another omni-channel for sellers, right? And because there's a website, it's a system that's already handled by the website. So I guess if you were to take in phone calls, for example, having to do it, or you do an auction process, right? Costs of doing that would be higher. But through your website, because everything is handled on your behalf, cheaper. Okay, markets that handle food ingredients are divided into wholesale and spot sales markets and others, including large, excuse me, including large-scale bulk corner, Central America auction, Agra, and Sokuhan, which handles other items. By referring to past sales data on our website, exhibitors can sell their products at prices lower than the regular wholesale price and can reduce product waste by disposing of excess inventory, etc. Buyers can also benefit from the ability to keep purchase prices low and increase profits. MR. Sellers apply to our company to open a store, and after going through our designated procedures, the livestock, marine, agriculture products they wish to sell are posted on our website. And we receive orders from buyers who wish to purchase. We also allow direct transactions without going through our company, providing an effective service for expanding sales channels. Sellers pay a monthly, fixed monthly store opening fee according to the number of items exhibited. And if they transact through our company, they pay a market usage fee that is fixed rate multiplied by the purchase price. I don't know how the website is set up, but I can envision if you are only allowed to post your storefront. I don't think most people would do that. I think most people would allow for some variable rate products. I wonder if you don't pay for, if you don't agree to the variable cost, like the market usage fee, whether you're even allowed to post what products you can sell and what price point they are. Like if I'm let's say I'm a fisherman, right? And I sell different types of fish. Do I just have a storefront for my catchings, or am I allowed to post, oh, trout is this much, salmon is this much, tuna is this much, and then the person has a call in order to do that transaction? Or is that not allowed? Because if that's not allowed, then I think most people wouldn't agree to the market usage fee, right? So that they can post what products they have. Because if you're a buyer, right, you don't want to go through the process of calling up someone and be like, hey, how much do you charge for trout? You want to be able to see it right away, right? I wonder what the dynamic is. Whether if you open a storefront, are you able to list products but just not transact through the website? Yeah, I wonder what that looks like. It sucks that I don't have access to that website, so I might need to install some free VPN or something to access it, which is annoying. VNet sellers apply to open a store after going through the procedures. Tableware, kitchen equipment, and other products they wish to sell are posted on our website, and orders are received from buyers who wish to purchase. Similar end market direct transactions can be made without going through our company. Sellers pay a fixed monthly store opening fee, the number of items they wish to sell. So there's no market usage fee here. Doesn't seem to be. This is a monthly store opening fee. Hmm. Okay. Wholesale and spot market. Seller submits an application to us to list their products, including through our designated procedures, the livestock, fishery, agriculture, and other food products they wish to sell or post on our website, where they receive orders from buyers who wish to purchase. Although direct transactions are prohibited, many companies use the site to dispose of excess inventory. Sellers are not charged a fixed fee, and the fee structure is entirely on a piece-by-piece basis, with sellers only paying a system usage fee, which is a fixed rate multiplied by purchase price. I wonder why they did that though. Why make it so that for the wholesale and spot sales market, you don't charge a storefront, but you charge a fixed variable fee? I wonder why that's the case. And then for kitchen equipment, there's just storefront. There's no variable. That to me is interesting. Tell us, do you know why? I think potentially they want to incentivize sellers to do this type of thing. So maybe by not charging a fixed fee, incentivizes sellers to come onto their platform and is just purely variable. I wonder what the leverage point is, why these are structured different. Can't think of it right now. If any of you guys can think of it, please let me know. Dokuhan, sellers submit an application to us to list their products, and after going through our designated procedures, the tableware, kitchen equipment, other products they wish to sell are posted on our website and receive orders from buyers who wish to purchase. Our transactions are prohibited, and just like other wholesale and spot market sales, sellers do not incur a fixed fee. The fee structure is entirely on a piece-by-piece basis, with sellers only paying a system usage fee. So we have system usage, storefront only, and storefront / fixed use. Okay. Okay, so we finished 4380. Look at the next company. Crap, I took the blank version and then totally just used it. I should have done that. Okay, whatever. We just start from scratch again. Good morning, Kalma. Good morning. Did your Snorlax, your Zen Snorlax or your Buddha Snorlax have a nice meditation? 5570 is Denoba. What I like about Denoba. Positionals, distribution services. I see. Yeah, so this one also has pretty good margins. Thing for me is like a lot of their technology I just don't understand. Not really within my circle of competence, so I can't think through exactly all the avenues that they have to expand. But like for something like a food and beverage, like you connecting buyers and sellers, that's easier for me to kind of visualize and make a prediction, 2 years out, for example. Might not be accurate, but at least I can do it. Genova is one that's like I have no idea about positional data information. Like this is a completely new industry to me. Yeah, that's worth writing about though. It's interesting. So do that. Okay, everybody, it's been 2 hours. I'm just gonna take a 20-minute break, and I will be right back and just continue where I left off. Yeah, I intend to finish all of my writing today, so it's gonna be a decently long stream. Okay, I am back. Sorry about that, everyone. Okay, Genova. So, what's the price? Oh, I went up a lot. Okay. They call it Genova. So just to recap, Genova provides positional information data distribution services in Japan. The company also develops positional information systems, as well as offers positional information consulting services, provides services for survey, land and house investigation, construction, agriculture, UAV and drone, and mobility route applications. The company was incorporated in 1997 and is headquartered in Tokyo, Japan. All right, let's take a look at the company. And they have an English site, which would be awesome. Let's see if they have information that I may need. So this looks like okay, it seems to be just just an English website. It doesn't really have like the investor relations portion of it. If I recall correctly, I do have the filings converted. So let's recap this. $6.94. What is today's price? $7.16. So increase a little bit since I looked at it. Q2, the last quarter. Double check if there is any new filings. May 14 Q2. Nope, same thing. We didn't convert the annual report, so I could download the annual report. Just for later. Semi-annual report. Okay, so just an overview of Genova does is essentially they use satellites, and with satellites, like help with certain satellites, they're able to survey, like geolocate, like let's say a plot of land. Let's say you're a builder, right, and you want to know exactly the coordinates for that landmass, your plot of land, right? So using cheap methods, you're able to get meter level error, right? So you see here, there's 4 satellites, and the error factors are these components: satellite clock error, satellite orbit error, satellite system error, ionospheric delay. I don't know what any of this means, to be honest, but basically it results in meter level error. With the help of some correctional information data, they're able to optimize it in a way where the satellite positioning only has centimeter level error, right? So you can imagine in use cases where accuracy is of paramount, that this would be the go-to service, right? Yeah, and it goes through the technology about how it's done, how you're able to get centimeter level, you know, accuracy. So the way that they talked about in terms of meter level error, that's the cheapest, right? Is the cheapest. And then centimeter level error, they talk about how it's done. So observe 2 points simultaneously, the reference point and the observer, obtaining the observation position based on the data of the reference point, eliminating error factors. Disadvantages. Yeah, so merit is that it can be used in places even where communication is unavailable. And in disadvantages, the reference point requires installation and maintenance. The quality of the reference points affects the positioning accuracy. Two receivers are required, high cost. If the distance between the reference point and the observer is far, accuracy degradation. Network RTK. I think this is what the company does, what Genoma does, is create a virtual point based on the data of multiple reference points. Observe 2 points, the observer and the observation point at the same time, and based on the data of the virtual point, obtaining the observation position, eliminating error factors. The reference point, no installation or maintenance required. With only one observer, receiver, cost savings. The reference point is virtual. So typhoons, maintaining high accuracy without being affected by external conditions. Positioning quality is stable because multiple reference points are used instead of one. So this is one reference point. This is 5 reference points. Cannot be used without a network connection. Areas that are surrounded by reference points cannot be used. Areas that are not surrounded by reference points cannot be used, such as remote islands. Yeah, so this is all new to me. This, like, I don't think most people have circuit confidence in this. Yeah, but what I like about the company is that I know that their profitability is quite high. That's the first thing that stood out to me. The profitability and the margins are quite good. 55% even margins. Gross profit margin went up to 80 something percent. Then really high net incomes. The problem is, how do you increase sales, right? Because sales has increased gradually. I know in Japan, whenever a old building, let's say you inherit a building, correct? You inherit a building after your, let's say, grandparents pass away, your parents pass away. A lot of people don't upkeep those units, those properties. Probably maybe because they don't have funds to do renovations, or they don't care about, because every people like newer buildings. So it could be that because, oh, this house has been like a 30-year-old building, and it's just the cost of renovating is similar to building it brand new. A lot of people just demolish it. So I can imagine the scenarios where you're demolishing your property and you have to do like accurate surveys. That could be a use case for it. Yeah, and let's say there's some natural disaster like a tsunami, right? And then it wipes out entire town, and you kind of have to just resurvey and just parse up, okay, whose land is whose, and then which plot of land is whose. I think this would be a good use case for this company potentially. I am new to this, focusing on areas affected by a decline in the working population. We contribute to solve social issues through business activity. Genoba's technology, high precision, high quality correction information data by utilizing all electronic reference points and patented technology aligned with national coordinates, accumulated as a pioneer of GNSS positioning. Stable delivery, 24 hours a day, 365 days a year. So let's say use cases. Construction field, we have to do the work within a limited time and cost. Therefore, we must increase productivity. Moreover, it is difficult to secure skilled technicians. Agriculture, because of the labor shortage, there are only a few people working in the large fields. I need more. Disaster response, when you want to understand the disaster situation, carry out recovery, but the response poses a high risk to human life. Not sure how that's applicable. So high precision location information services will see increased use in the future where this technology will be essential to creating a safe and secure society is fast approaching. So unmanned construction machinery. So this is one that I can get behind. So example, like you're on a construction site, right? And then you're remotely controlling, let's say there's some dangers of, doing construction, right? Instead of having a person within this, an excavator is what that's called. Like this machinery, you can have a remote human, through internet, connection or whatever, control the, control the machinery. And having high precision location information is very important in that you ensure that, let's say you're digging up, you're digging, right? Then number one, with remote access, controlling the machinery, the accuracy of controlling the machine, knowing where the machinery is. And second of all, knowing where you're digging. So ensuring that if you can track, let's say you want to dig up a plot of land on this exact geolocation, right? To, let's say, avoid pipes, avoid certain things, right? Having high accuracy is extremely important. And if you can track the location of the machinery relative to that point, let's say the reference points, right? Then I can see that being an application. And if this opens up, because I don't think this is like a widespread thing yet, revenues could increase dramatically, because this company is only a $10 billion company, right? It's still pretty small relative to its use case, right? So this is more of a TAM investment, so automating agriculture machinery. Yeah, so like spraying herbicides, onto the field. That's one. Labor saving infrastructure inspection. Sure. Infrastructure inspections, automation, and autonomy, industrial equipment. So I don't, I think Amazon, whatever, was thinking about using robots to deliver packages instead of humans. So by using drones, I think in Amazon, in some places they have like the Amazon little robots that just occupy the sidewalk and then just roll to wherever your location is to deliver products. So that excuse me, that having high accuracy location information is also very important. But then what I don't know about this company is who are their competitors, right? Like who else has this high precision information service? Who else offers this, right? Like I don't know what the barrier to entry is, whether they have some like IP that prevents people from doing this. That I'm not sure. So let's insert the information that we do have. 6. $2.9 cash because they have no debt. 6.3 billion enterprise value, 3 times book. Dividend yield is 0.8%. Pretty low. Look at this. Okay. We can fill it in though. Financial statement. This company. I do. So let's see. Interim period endings. We don't have here. So here is fiscal year. Let's say this last one is 2024. So 13333, 715, 718, 98. Wow, really high margins. Yeah. Grab data from that. For buyback status report. I have to go into 2024 to remember that. Okay, we do have the information here. So if we want to, we can even do 2023 and use the other one. Last period. One, 2, 6, 5, 6, 9, 4, 2. So they didn't change their forecasting. Quick look at their cash flow. Okay, low depreciation. Very low capex. Nice. But they already have the technology. I wonder how much they spend on R&D. That'd be an interesting question to answer. Or I can just put double check the profit code. $76.55. They haven't. Yeah, depreciation has been dropping probably because they don't have to purchase much fixed assets to do what they have to do. So how far can we go back? No, I have to pay to get that information. Or does this? Oh, this goes back that far. Okay. So it seems like it's just declining, right? So if it's declining, $55.42. If I were to guess over here, probably drop to 30 something. More conservative at the 38. Capex, very little spend. I think we're able to look at the actual investing activities here. Expenditure on fixed assets, on intangibles, that's -10, -6. Okay. Insurance reverse fund. Insurance reverse fund. What is that? So -10, -7, -6. Yes. It's not exactly entirely accurate. Oh, how come it? 6.5. This is -10 now. I put it as -. Even though there's some intangibles, we can do -6.5, -3.5, something like that. 6. Okay. Marginal. You can say -10 here. Hmm. I thought this was cheaper. This company was cheaper than I thought. Check this. The balance sheet. Really? 292? Correct. No investment securities, no. Net debt. No total interest bearing debt. Okay. 6. 4. Hmm. I thought this was cheaper. I thought this was cheaper actually. Hmm. It's not that expensive, but it could be interesting. High ROE though. So then is the question like, we're waiting for people's use cases to get to a point of needing the service, or are we just, what can we do, right? Because sales growth isn't that high, right? Sales growth is just maybe like, yeah, 5%, right? 5%, 5%, right? There could be a huge uptake, just given some like increased use case, for example. But yeah, the TAM is high, and these multiples aren't exactly that. Trying to think. Okay, let's write our thoughts first. Okay, so fiscal year 2025, I think we should do 5.8 times PE of 18.5 times, highly profitable. Yeah. $55. It's a good business because they've already built up whatever they need to build out, right? So right now it's just any additional revenues is hugely profitable. Higher gross profit. I don't know if this is offering leverage, but gross profit margin went up. I don't know how. Not like they're, I guess they are selling a product, like a service, pretty much. Okay, so let's take a look at the use cases. So civil engineering, ICT construction, remote control construction machinery operation, unmanned construction, experience Ministry of Land, Infrastructure, Transport, and Tourism, Chugoku Regional Development Bureau, and Chugoku Technical Office. The Chugoku Regional Development Bureau's Chugoku Technical Office is focusing on developing human resources who can use digital technology to handle surveys, plans, designs, construction management, supervision, inspections, and other tasks in order to promote productivity improvements and work style reforms at on-site infrastructure development and management and public service delivery. In the educational content, participants can experience remote operation of heavy machinery, and our service is used for machine guidance. Machine's guidance displays the difference between the actual site situation and the 3D design drawing on the screen. And by working with, while looking at the screen, construction can be carried out according to the settings without marking the site. Okay. So I think what it means is like the bottom right screen where you can see like it's like a real-time marking of the site essentially. So you're working with the map of the site based off of your positioning. I think that's what it is. Railway Field MMS, Mobile Mapping System Technology Application, Asia Air Survey. Rail is a railway MMS measurement analysis and system service built on the results of joint development between Asia Air Survey and JR West. Provides cutting-edge 3D spatial information measurement and analysis technology to railway operators. Our post-processing data service is used for location information analysis. The introduction of the system makes it possible to efficiently obtain 3D information around the tracks, and furthermore, to perform high quality and efficient operations, such as shortening the time required to enter the tracks, improving safety by reducing labor, and grasping the on-site situation. By improving the efficiency and accuracy of survey and measurement work, we are contributing to solving various issues faced by railway businesses. 3D information around the tracks. Interesting. Networked RTK for marine surveys. So Japan Gitan conducts marine surveys, including land and offshore surveys. In response to the need for digitalization and improved business efficiency, the company conducts 3D observations of the seabed and uses 3D models of the seabed before construction is completed to automatically create cross-sectional views, automatically calculate solid soil volume, and check on-site progress. Our network type RTK is used for observations using a multi-beams echo sounder. The underwater section uses sonar, and the above water section uses GNSS antenna. Our service also contributes to the efficiency of observation work, as it allows for stable observations without the need to install and manage reference stations at ports for offshore observations. This is kind of beyond my knowledge. Survey, urban space utilizing MMS 3D modeling. Mobile mapping system. While moving around in a vehicle, this system performs original measurements, 3D laser scanner for moving vehicles such as trains by installing and measuring efficiently, measure with high accuracy and density. We use our post-processing data to correct the observation results. It uses national coordinates and is obtained. The collected 3D point cloud data is at the map information level. Accuracy up to 1 in 500 is possible. Smart grassland creation and improvement work. Part of the grassland creation and improvement work, plowing, soil improvement, etc. We're currently spreading good quality materials, but smartization against the backdrop of labor shortages. Really bad English. We are currently working on all of these tasks. This is done using farm machinery such as turrets. Skills are required to operate agricultural machinery. The operation of the commercialized agriculture machinery requires skilled drivers. The results are comparable to those of the work carried out by the bar. Contribute to resolving problems where labor in the field has been created. I wonder if this is similar to like using remote control of like the construction over here, like similar over here, saying that you can remote perform these agricultural farming techniques with these machines. Okay, so they do have a patent. The alignment of the results of the nearest EORS station. Alignment does not match the map. Use of national coordinates is mandatory for public works. Pause. Its position is constantly shifting due to crustal movements around Japan. Right. Distribution of correction information taking into account crustal movements. The 3 closest points to the observation location are automatically selected from all EORSs, and correction data is distributed to ensure the coordinates are consistent with the latest coordinate values, published by the Geospatial Information Authority of Japan. Real-time observation of electrons. The current coordinates of the reference point, the current position marker, the national coordinates location to the map, technology to convert and align. That's what I thought, right? Like, so if you have a reference point, right, and then there's actual crustal movements, then the former location of that reference point is no longer accurate, right? So this points to potentially their moat as well. Exchange of information with distribution system manufacturers over many years and accumulation of knowledge. The construction of the service in Japan. Hello, how is it? I have never seen you before. Welcome. Hello from Canada. What time is it over there? How is it? So the construction of the service in Japan, which has many cores, What exactly does cores mean? Alignment of the results of the nearest cores station. So I think that's the reference point, I think is what I mean. Which has many cores, is unique to in the world and has made possible through long-term close exchanges of information with manufacturers. The knowledge gained from operating this service for over 20 years contributes to stable data transmission. $8.47. Is that morning? That if that's the case, good morning. Good morning. That's 12:47 where I'm at. AM. AM. So it's nighttime for me. Point two, stable data provision system. Increasing the density of cores for generating correction data. Unstable quality assignment. Unstable quality and accuracy of data delivered. Cause problems with the distance between electronic and reference points in ionosphere. Solution: high density by using all electronic reference points. By using all of the approximately 1,300 cores installed by the Geospatial Information Authority of Japan, we have been able to distribute stable, high-quality data by narrowing the spacing between the cores and limiting those that are not suitable for operation. Redundancy of the distribution system and stable infrastructure. So stable distribution. Outages of distribution system, delays in data distribution, increasing data volume in distribution systems, insufficient server capacity, and network problems. Thorough management of delivery infrastructure and data quality. In order to provide 24/7 service, we monitor our distribution servers and other infrastructure in real time and have redundancies in place in case of emergency. We also constantly monitor the distribution data for factors that could lead to a decline in quality, ensuring stable service. Awesome. Thank you, Howie said. Glad that you can, join us and yeah, hopefully I can deliver some value to you in terms of Japanese stocks. But I do look at other countries' stocks as well. It's just that the Japanese stock niche is something I just carved out for myself. But yeah, for sure. Thanks for giving me a follow on Twitter. Also check out my Substack as well if you have time, and subscribe to my YouTube channel if you haven't already. I'm still below. I'm currently like 66% the way there to my weekly goal of getting 100 subscribers. So if you're not subscribed and you can subscribe, that would really help me out. Thank you. Okay. In order to provide 24/7 service, we monitor our distribution servers and other infrastructure in real time and have redundancies in place in case of emergency. We also constantly monitor the distribution data for factors that could lead to a decline in quality, ensuring stable service. High density electronic reference points, analysis software and test research, solar activity, electronic reference points, distribution data quality check, VM based server redundancy. Okay. A lot of terms that I've never heard before. Point three, a strong trading foundation. We have a track record of over 20 years since the Geospatial Information Authority of Japan first made control point data available to the public. Widely used by infrastructure related companies for surveying and investigation, and highly rated for its stable accuracy and reliability. With the exception of time limited projects, research and demonstration experiments, the number of cancellations is low. They have 9,162 contracts. Okay, so this is definitely a KPI you have to look for into the future of how many contracts are there. Excellent stock and cost structure. New contracts continue to accumulate and existing contracts increase, enabling stable sales growth. This is definitely what we want to hear, right? Current customers are using us more, so we generate more sales, and then we have new contracts coming in. This is very good. This is definitely something I want to see. So So maybe just put this. Or existing customers contract sales are increasing and new contracts continue to to accumulate. They have 9,162 contracts as of fiscal year. As of which period is this one for? Q2. Why are there no years on this? But okay. So this is a growth stock. So we have to think about to ourselves like, hey, are these multiples fair for a growth stock, right? Yeah. We aim to further expand further into drones, IT, agriculture, etc., and develop services in new areas, thereby accelerating the increase in new contracts. Right. So then the question is, because this stock has only been on the market for not that long, right? Since 2023, right? But then they've been in business for like 20 years, correct? So, right, they have 20 years since geospatial, yeah. But then my question is, okay, so business, well, Genova has been in business for 20 years. What kind of applications have they tried to to expand into? What has been their speed of execution? Right, because we don't want them to just continue at the rate that they're increasing right now, right? We want, they say, hey, we have all these different applications: drones, deliveries, remote construction, remote agriculture use cases, but like, you know, like that would allow this revenue rate to increase substantially, right? But then how did they perform before this, right? And if they are able to, like, let's say double revenues, then that would be massive for this company, right? Then whatever is being charged right now, right, is totally reasonable, right? High profitability due to excellent stock and cost structure. The data purchase fees for cores, the usage fees for the analysis system, and the maintenance fees are all fixed. Oh, so it's infinitely scalable. Huge operating leverage. The costs are unlikely to increase in response to an increase in data sales. Operating profit margins for the fiscal year ending. Okay. Regarding cost of sales, the increase in the cost of distribution has been extremely low structure by achieving stable sales. Continuously high profit margins at each stage is possible. Okay, this is something I really like. IP. So much of the cost structure is fixed. Operating leverage. Nova experiences Okay, Pellet Stove, how did they do? How did they do? Is that on top video? FYI, I don't have a VPN installed on my computer, so I have a feeling like if I'm trying to do, you know, anything related to Mart, I just don't have. Yeah, I just can't access it, which is annoying. So I try to do something. No, I enter this. Hmm. I wonder. Okay, thanks for letting me know, Pellet. I wonder if that is a setting. Let me see if I can edit that. It's probably a function of how live streams are set up, in that they probably don't allow you guys to paste links, so not as not to let's say someone has an OnlyFans or whatever, and and wants to post it for clout, settings. How we said you can take a look at interactive brokers. Um, I'm not sure what brokerage is in the UK. But these aren't Canadian companies. This is Japanese companies. So in Canada, I use Interactive Brokers, but I think they're an international firm. So they have they cover a lot of stock exchanges across the globe. Palestov, you can DM me on my Twitter. Pretty sure you have me on Twitter, so you can do that. I'll just message you now. There. Awesome. Okay, let me just translate document. Excuse Q1 earnings. Okay, so increase in operating profit, increase everything increase. 8.2% increase in operating revenue. No change in production. They were expecting everything to increase anyways. And the dividend yield. Okay, so I'm just going back to 4380 just temporarily. So in in the retail restaurant industry, rising food costs and utility costs are cited as one of the main factors pushing down business performance, and both buyers and sellers are urgently seeking to reduce costs and ensure profits, which is good for the company because they are a low cost provider, or they're operating a platform where buyers and sellers can, have cost savings. So in this business environment, our mission is to create infrastructure for transforming distribution. We continue to rapidly implement measures that accurately capture the needs of both sellers and buyers on the sites we operate. Specifically, we are continuing improving the UI and UX at each sales floor, including MMart and BNet, to enable centralized management of products listed by sellers and on the food sales site. We have put into practical use a listing and sales support tool that utilizes conversational AI as measured to improve convenience for sellers. Based on the philosophy of good for sellers, good for buyers, good for society that we have had since our founding. We're also working to strengthen our support and consulting services activities in collaboration with store owners to grow together. Yeah, excuse me, my throat's a little dry. I'm just gonna be back in like, a few minutes. Just grab water. Be real quick. Okay, I'm back. It's got a little bit of Chinese honey water. All right. So they're basically improving the user experience by updating the UX and UI for the Mart and BNet. Mart being their biggest sales driver, their core sales. Majority of their sales come from Mart, and then the secondary one, actually their third highest sales is from BNet. Their wholesale generates more sales as a second one. So interesting that they're using conversational AI to improve, sales support for their sellers. But I don't know about your guys' experience with conversational AI. I find it like usually it's rather useless. It's kind of like a frequently asked questions type of thing in terms of response. And then when you have something unique that you want to ask, it doesn't really help, or like you have to direct it to a live representative anyways. So that's what I find. We have positioned, let's see, I haven't finished reading it. We're also working to strengthen our support and consulting activities in collaboration with store owners to grow together. We have positioned the use of AI technology as an important management issue, and with the idea of all employees using AI. We have launched the AI Grand Prize reward system for employees in January 2025. Okay, this system encourages ideas and practice for utilizing AI to improve business efficiency and creating new value. And all employees can participate regardless of department. Okay, I think this is mainly for this efficiency, right? So for example, if you need to draft an email, you can type in notes and then be like, okay, let's use AI to draft the email and send it, right? Or just to shorten the time that it takes to complete certain tasks. And so getting people to utilize AI and get in the habit of doing that. But this is more of a cost savings. The main issue for this company is not cost savings; it's increasing revenue, and that's I mean they are already extremely profitable. So I think the focus should be on increasing revenue. But this doesn't accomplish that. But it's a good thing though for their company, for a Japanese company to be like, hey, let's utilize AI to be more efficient. That's always a good thing. This system encourages ideas and practices for utilizing AI to improve business. Okay, we will continue to actively introduce AI technology and create an environment that supports the creativity and ingenuity of our employees, striving to improve our corporate value. The number of new buyers registered is steadily increasing, with over 1,000 companies expected to register in March and April 2025. As there are many buyers looking to purchase in large quantities, we would like to focus on auctions and other events in the future. Oh, interesting. Yeah. So that's a new product offering, right? So if you imagine Tsukiji fish market, right? People auction and bid for bluefin tuna. I wonder if it's going to follow something like that. That'd be interesting. We started our sales and collection agency business in December 2024, but we plan to target medium size and large companies in the future. This is the first attempt in the industry. We are currently preparing a warehouse for our new business. Interesting. So this could potentially increase sales. Okay. As a result of these efforts, the number of buyer members increased by 3,008 companies from the end of the previous period to 230K, which is good, and the pace of increase of 1,000 companies per month has not slowed. I mean, they say at the pace of 1,000 per company is not slow, but the thing is, the amount of increase has been slowing down, right? Because before it was increasing by like 23K, 20K in 1 year, and now they're increasing by, let's say, if it's 1,000 per month, that's 12K, right? And then what if next year, like, oh, we think we're going to increase by 6,000, right? So that's 500 companies per month. So we're going to project 500 companies per month. So you're on pace for 500 companies a month. But then on an annual basis, on a year-over-year basis, your increase, your growth is being limited, right? As a result, the total transaction volume of the operated sites in the first quarter was mainly due to the growth in the M-Mart market. Sales are up 10%. As a result of this increase in total transaction volume, operating revenue from store opening fees and market system usage fees, proportional to transactional volume, increased to 335,000 yen. So that's 335 million yen. Yeah. Operating expenses actually increased due to increase in personal expenses, recruitment costs associated with hiring of personnel for the sales department. Expenses increase. Also, they're expanding their number of employees, which is good. Not a bad thing. Expenses increased 2.2%, but operating profit continued to increase to 138 million yen. Okay. Overall, it just seems like they're on the right track. It's just that number of companies that are going or buyers that are going is declining. Still the same on that. But I don't know what the market is expecting them to do, but like, their goal is to increase operating profit by 18%, 19%, operating revenue 11%. Maybe they're seasonal. Let me take a look at the give me a second, guy. I got something sticky on my fingers. Right back. Okay, I'm back. It's from the honey that I was pouring into my cup earlier. Got stuck on my. What's thought process? They just have oh, seasonality, right? So let's sorry. Yeah, seasonality, so let's look at quarterly periods. So Q1 310, 313, 335, 335. So Q3, Q4 tend to be better. It's like food items. Which food items would do better? Well, if people are on vacation, it probably does better, right? Yeah, people don't have to work, it's probably better, right? Or people going out to eat. But Japanese people tend to eat out because some places the food isn't that expensive. Okay, next previous quarter, 2024. Low, low, high, high. Yeah, so okay. So Q3, Q4 still the same. Low, low, high, high. Yeah. So increases, okay. Increases throughout the period. But let's double check on what period it corresponds to first, right? So here this is and then ending January 2026. So if Q1 is in January, ends in January, right? Then technically Q1 is Q4. So from when does it start? The start date. Let me just double check. Give me the range, buddy. So it probably starts in October, right? So okay, October to January 31st. So from October until April 30th. Wait, hold on. Wait, it ends on April 30th? Oh, the fiscal year ends in January 2026. Sorry. First quarter is February 1st until April 30th. Okay, so no, so Q4 is still Q4. It's just like delayed by 1 month. Right? So, okay. Okay, so this is February until April 30th, and then instead of June 30th is July 30th, right? May, June, yeah. May, June, July. Okay, so still around the same period. So still the summer to winter months does better. Hmm. I wonder why. Why are sales higher year end? I'm not sure. If you guys know the answer, please contribute. So yeah, given that this period only, even though this period only increased 8% because this is Q1, this is one of their periods where their sales are typically the lowest. I think this is fine. Well, let's see, and then 614, 138. This is still less than a quarter of the way there. So I don't think tomorrow's gonna drop. I don't think it's gonna. Well, depends what type of results are kind of baked in for tomorrow, right? Like it increased 7%, right? The price of the company increased 7%. So it might drop tomorrow. Not sure. Not sure. Right. These seems like normal results to me, right? And I feel like they're meeting expectations. They're not meeting expectations, right? Unless formally the market consensus was it's gonna underperform or whatever. Um, yeah, I mean, they're on track to this, so maybe a drop tomorrow. I'm not sure. Okay, so that's my analysis of the earnings results. They're on track, pretty much. Okay, back to Genova. Okay, what do we want to figure out? So they do have a patent. Uh, Patent number 5832050. Right. Yeah, so because of operating leverage, right? So even though sales CAGR at 6.6%, operating profit and number of contracts have increased on higher. But what's surprising me is number of contracts are increasing at a higher rate than sales, though. That's weird. So they're basically onboarding more companies, but then these companies generate less sales on average than their existing customer base. So new customers that come in don't move the needle as much. This could be because they've already penetrated their biggest potential customers. So then what's left are smaller, smaller medium enterprises that are just smaller and generate less sales. Or it could be just luck. So hopefully they can increase number of contracts because I think that's a good thing, right? Increase number of contracts. Hopefully it's not the other case. Okay, Genova's management resources, high precision location information correction and distribution technology, strong customer base 9,162, sound financial base, growth drivers, increasing demand for unmanned operations, automation. I think so. Creating new business models and building new system infrastructure and collaboration of business partners. I wish they would provide like what is the TAM for each of these, right? That would look like, right? But this company is cheap enough where it's like, oh, did you have the TAM? Okay, let's see. The land housing survey is 3 billion market. So okay, market size is 3 billion. What is this? 1.3. Are you saying that they own like close to 40% of the market? Is that what you're saying? Monday? I wonder. Agriculture. I feel like they're just an additional service, right? Even though the drone market size is this much, it doesn't mean that that's how much they can extrapolate, right, from the market here, right? Like maybe it's like charge them a service for the accurate, data for the drones, you know, or for these agriculture applications or construction applications. Like it might be some subscription model where you get data on a continuous basis, um, giving a monthly fee or something like that, potentially. So I think it would be like a percentage of this market would be like 1 or 2% or something like that. Which would be the same. Let's think and do a spot. It's not a CERN. It's like 0.8 billion. 0.8 billion. Sorry, this is 0.8 billion. This is 0.08 billion. So 8.8 billion. 0.88 billion. 0.16. Additional 1 billion in sales. Oh, so that could lead, if that were the case, it could lead to a doubling in revenues. If that were the case. And then expand to even more applications, right? Mobility, crime prevention, factory, forest location, forest, ocean, yeah. But they have so many, so which one are they going to go into, right? Like this is like a typical thing you would see in like a startup or venture capital, like something that's still on the growth path. But like, which one are you focusing on? Or are you just literally just waiting for someone to create the use case, right? Like the drone delivery, construction, remote construction, and agricultural, bring fertilizer or insecticides, um, using your data. Okay, so if I what I do like, so there are many use cases and applications for Genova's location technology. I'd probably put the actual use case. Surveying, aerial survey, land, house investigation, drone, civil engineering, and IT, agriculture. Okay, so already signed a business partnership with KDDI. We're also considering expanding our business through new business partners and M&A. M&A is good. I would like to see them use their cash. Cash they have? Okay, not a lot, but like a good amount. Forest resource surveying using drones. Analyze forest resource volume, improve efficiency of forestry survey work. It is expected that the rate will be improved. By introducing our service, you can obtain images with high location accuracy. This allows for efficient data creation. Drone delivery. Oh, this is what KDDI does. Maybe. Considered, not concrete. Drone delivery service, realizing the transportation of goods by drones flying beyond visual line of sight, geographical information, and location information. By introducing our services, accurate matching is possible, accurate operation management leading the nation in achieving flight route cruising. Automatic bus fare calculation and cashless payment. Automatic fare calculation and cashless payment services are realized. Based on bus location information, we confirm that accurate fare calculation results can be obtained by providing a real-time, stable, and highly accurate location information. Mobility as a service that optimizes a combination of multiple public transportation and other mobility services and allows for search, reservation, payment all in one place. I mean, the current system of which people pay for bus fares is already pretty good. I don't know why you would need an additional service like that, right? It's literally, it can be easy as a QR code and you just scan the QR code and you pay for it, right? Why does the location matter? Because you can literally, in Canada, if you get on a bus, you can literally tap your credit card onto their payment system while the car is moving. So I don't know why the location really matters, I would say. M&A also planned. Taking advantage of the trend of automation and unmanned operation, we're focusing on an expansion of civil engineering and construction fields. We will actively pursue development in new fields, including the drone industry. Like, instead of saying you have all these different ones, like, tell me what you're going to focus on, right? Like, I feel like you can't do everything well, right? So, I mean, obviously you can. You can hire more employees to do more things, but like, start doing it. Start making some progress in some areas, right? I'm not seeing. You mentioned all these different markets, but like, which one is it really? I guess KDDI is the one that is most progress is being. I probably need to spend some time to really understand what the company does. YouTube videos and stuff. Did they have an English website? I think they might have. Oh, they do have an English website. So, okay, let's see. Technical information. some technical stuff. You can determine the three-dimensional position by, okay, so you have a receiver, and then you send a signal from the satellite to the receiver, right? And then you can do some calculations, and for better accurate calculations, you would use multiple satellites. Okay, this is information for me to figure out later on. I think I sent you what I like. Probably should note this. U2 IP? U2 IP. Yeah, can it be bought out? I'm gonna quickly take a look at the CEO or whatever their share count is. Have a look at the share. Right? We only okay. There should be a share count thing here. Okay, 20.31%. Have a semi-annual report for this company? Oh, I do. Oh, I didn't translate it yet. Oops. Yasuko. Who's their president? Satoshi Togami. Interesting that two people own basically 40% of the company. Who's this Yasuko person? Doesn't work. Yasuko Minami. Individual insiders. Yasuko Minami, Naoko Minami. Minato Ward. Hard to tell. Is there a timeline here? There's a timeline. I could look into the timeline. Some educated guesses as to who these people are. I also have to look at the securities report, which should be, but I just leave the question here. I think we have done enough. Company. Okay, one more. 1450. Anakin. So Tanakan is essentially a company that engages in demolition, right? Which is huge in Japan because like anytime there's a property, people usually don't like older properties. They just tear it down, demolish it, and build new. So they have a definite tailwind. Question is, the demand for demolition or increasing demand for demolition is increasing as uh, it's growing, but it's growing at like a pretty, like it's growing but slowly growing, right? It's not in an accelerated growth rate, right? For this, but there is demand. Okay, so Tekken 145 price for 375. Order most year. Let's double check. Use the bathroom real quick. I'll be right back. Okay, I'm back. Okay, Tanakin. Right, so they don't have any new additional. Most recent price was 1375. Let's update that real quick. 1375. Recap the company. So 12 billion market cap. No debt. Net cash of 4 billion. So enterprise value of around 10.8, 7.6 billion. The company forecasts 1.7 billion in future earnings. So valued at around 4.6 times EV/EBIT. Book value of 8.2, which means price to book is 1.45. Good ROIC and good return on operating assets. Yeah, good margins, low multiple. Just that they have cash, and then the question is, how can they use that cash? That's the thing about this company is that yes, it's undervalued based off of multiples, but the thing is because they have all this excess cash, like you're paying up for a P perspective, it's like you can say it's kind of fairly valued. And then the question is how do they use that cash? Like I would hope they use it for some investment security or some real estate or whatever, but like yeah, and if they do demolition, technically they could expand into other horizontals or verticals within the construction industry, right? Um, and to utilize that extra cash in a way that's productive. They have 4 billion yen, right? They can definitely use that to acquire something, right? Yeah. So I'll just review based off of their investor presentation. See if they don't have an English site. So I remember I do remember actually converting it. So go through it right now. Find the filings. Yeah. 1450. Okay, IP. Let's go. Okay. So oh, 82. So they always say like safe and secure in a lot of their IP. Yeah, mainly probably because they have a track record or reputation of keeping their construction workers safe. Let's say not causing any ruckus or any damage to neighboring units or properties, right? So they have that reputation, right? So that is a selling point for them. Highly rated for safe and secure construction management and courteous neighborhood support. Trust based on consultation and referral cycle. So you have partner companies. They cooperate with this company because they're safe and secure. They get highly rated. Consultation. They request consultation, but then they have project preparation support. So they give estimates on how much it's going to cost to demolish a certain property or building. Partners. Theater, consulting, financial. Yeah, I just want to go through like the main like tailwind I'm gonna go find that right now. So I got more sales from developers. So a huge increase by developer, by contractor. This is a little bit confusing. I don't know why my destination is like this and contractors like this. These are, yeah, a little bit confusing here. My destination. Maybe this destination is actually some other word that I'm not understanding. Because when I think destination, I think like, oh, is it the Kanto region? Is it this region of Japan or that region of... So I think sales by contractor makes more sense, probably. So I'll just look at this one. So 4.5 billion yen for developers, increased substantially from year 2024. I don't know why it tanked that much. Maybe they did some estimates and just no one picked them. Maybe they had like a bad patch, maybe. General contractor and users. A contract rate, repeat customer rate. A high level of repeat customers, which is good. Number of construction projects by scale and operation construction period. So by scale, they've number of construction projects by scale. Okay, so they have more projects that are over 100 million yen. So these are probably bigger projects, and because these are bigger projects, then they can do less projects that are below 50 million yen, is what I'm seeing here. It's not like necessarily a bad thing to have less projects. It should be like this 100 million yen project could be like a 500 million yen. It could be 300 million yen. So it could just be doing higher price range projects over here. Question period. Yeah, and then if there's more 100 million yen contracts, they're gonna take longer, right? So over 1 year is 16, which will more than 6 months, 38. So maybe these projects don't take longer, but maybe they can charge more because like let's say you have very easy thing to say is like, but this is not construction, this is demolition. But like in a construction sense, right? Let's say you want marble flooring, right? A normal flooring, right? Same amount of time, just more expensive materials, right? So I don't know how that applies in terms of demolition. Demolition that is more expensive takes the same amount of time. This is some probably industry expertise that I don't have. Okay, so growth strategy. So they want to be the industry leader. Okay. Next 10 years is a 3-year plan for building a foundation to realize a long-term vision looking 10 years into Company plans to strengthen its human resource technology alliances, which are sources of competitiveness for ownership-less management. Anakin Vision Next 10. What the company should look like in 10 years. And one-stop consulting capabilities and become a company that customers can trust in the future, effectively utilize accumulated know-how and develop new technologies that realize safe construction that takes the environment into consideration. Secure our position as a leading company in the industry. Good. Focus on redevelopment and large-scale projects in urban areas. Good as well. Increasing the value of the Tanakin brand. So yeah, being seen as a secure and safe brand is good. Enhancing the quality and quantity of human resources. Good. Strengthening technological development for safe construction. Sure. I would say potentially technological development to be able to handle more complex types of demolition. I think it's probably better because you can charge more and take on more 100 million yen plus projects. Yeah. I want to look at, wait, they had one that was going over like the tailwind of there being more demolitions in the future, I think. Where did that go? That was a very important slide. And I accidentally go over it. Interesting. Oh, 10-year plan. 10-year plan. This is probably where it is. Remember the English on this being kind of crap, honestly. um, okay, let's fill some of this data real quick. Where does it say 12.0? It's fine. A 4% dividend yield. That's good. You have growth potential and getting back some returns, they probably should increase their dividend if they're not going to use this cash properly, which they have room to be able to do. We have to change it to 2026 then, because that's the forecast period. 0.5. I mean, it's still cheap though. Regardless, it's still 0.8. So this company is less profitable than the other ones I've gone over, but the thing is they do have tailwinds. And I do know demolition is going to be, given their scale and size, they're going to be around for a while for sure. Yeah, I don't see a universe where they aren't around. Highly, decently profitable. Percent and then income margin. 8%, 10. Find that. So yeah, so because the translation on this was so if we go to the same page, essentially what it's saying over there is that since 2017 till 2022, the number of demolition companies increased from around, let's say, 13, 14, 15,000 all the way until 60,000. So there's a lot of competition. A lot of competition, a lot of firms. But then what we've come to realize is that yeah, so even though there's a lot of smaller demolition companies, they're saying that companies that can handle sales of over 100 million yen, there's only a few of them. So yeah, there aren't that many that do that. Okay, guys, my brain is feeling a little tired. I'm gonna need a quick break, and I'll be right back. Let's say a 15-minute break, and I'll be back. Talk to you guys soon. I am back. Thanks for tuning in. So because of how poorly this is translated, I did go over this before, but I'm gonna just quickly go over exactly what is the, because some of these are mistranslated, right? Like some of these figures are also like, these symbol signs should be numbers. Some of these are not translated very accurately, so I'm just gonna do that. And what information is more important? I think the business environment, the macro environment is very important. The competition level, outlook. Yeah. Oh yeah, this was a very important. So they're saying that the market size will double by 2034. Right, but as you can see, then the demand for the demolition is kind of, is up, but it's kind of flat, and then it's going to pick up quite substantially. So it's going to take, seems like 8 or 9 years for it to double. 9 years to double. But yeah, let's highlight. Can't able to copy this last time. Okay, so this is what it says. So the medium-term management plan primary stage is positioned as a 3-year plan for foundation building with a focus on developing human resources, technology, and alliances. In anticipation of the expanding demolition market, the company has set sales target of 12 billion yen for fiscal 2023 and 40 billion for 5, aiming to maintain its current growth trajectory. So that's from here to here. Keep in mind that this is an older document. This document is from there's no date on this. Date on this. 2023. So this was released 2 years ago. Let's go. I do want to go over this port. How we can highlight? We can highlight? Want to highlight? Okay, let's cross-reference this. See if there's any mistakes. Yes, unable to. Okay. So according to the construction work execution statistic report by the Ministry of Land, Infrastructure, Transport, and Tourism, the total value of the completed work in the chipping and demolition work sector was approximately, first number comes up here, 9915. So this is actually quoted in 100 million yen, so that's technically 915 billion yen. Sorry, 991.5 billion yen. Okay, with a prime contractor rate of 27.9%. Based on this, the size of the prime contractor demolition market is estimated to be around 277 billion yen. Okay. There are over 60,000 companies registered with licenses for building demolition work, but only a small number of them have annual sales exceeding 10 billion yen. 10 billion yen, indicating that the market is fragmented and dominated by small-scale businesses. Looking ahead, the demolition market is expected to grow due to the aging of buildings and condominiums constructed during Japan's period of rapid economic growth. The advancements of urban functions, increasing demand for logistics centers, and the redevelopment into intelligent buildings. Additionally, the overall value of demolition work is on an upward trend due to stricter regulations, such as recent mandate for preliminary asbestos surveys. So essentially, because you need the asbestos surveys, you actually have to charge for that. And so, yeah, so I guess they can generate additional revenue. Yeah. What does this part say? For fiscal year 2023, construction investment projected to reach so I've never seen trillion yen used before. I'm trying to think about how that is that 68,430,000,000? Yeah, what is in Japanese? Oh. Okay, so I think I understand. So 68,430,000,000,000. Okay. Representing a 2.6% increase from the previous year. On the other hand, global geopolitical risks and depreciation of yen are driving up various costs, such as fuel and labor, posing factors for increased overall construction expenses. What other information do outlook for the demolition market? I think that's worthwhile to look at. Here. Curious if it actually translates. If it actually copies. Oh, it does. Okay. Let's pick one of them and read off of it. Okay, so since concrete buildings are typically demolished 30 to 40 years after construction, the annual demolition market depends on the volume of buildings constructed 30 to 40 years ago. Okay, this is insight into the business economics. Based on this premise, we calculated the demolition market trend by taking a 5-year moving average of non-residential construction investment from 30 years ago and create a time series graph using fiscal 40 to 50 years ago. Why is this 30 to 40? No, this can't be the right interpretation. I think they fucked up the response. No, this clearly says 40 to 50, right? How did it? No, that's not right. So it just came up with a number by itself. What the fuck? Okay, that's wrong. Okay, so I'm saying, okay, so constructed 40 to 50 years ago. Based off of this premise, we calculate the emission by taking a... I'm just gonna do this one sentence by one sentence. That could fuck me up hard. I'm gonna replace these numbers with the correct numbers so that it can do this. 5. This is 5. That's correct. Into 5. Okay, translate that. Assuming that the annual demolition market depends on the number of buildings constructed 45 years ago. Okay, we calculate a time series by taking a 5-year moving average of non-residential construction investment for 45 years ago. Okay, that makes sense. That makes a lot more sense. Yeah. Okay, so this is 2023, and then something 100. 3 years later, and then this is 25, 115, 15%, 2034. Got it. Taking fiscal 2023 as a baseline set at 100, we create a graph showing the trend of the demolition market based on non-residential construction investment data from the Ministry of Land Infrastructure, yada yada yada. According to this, the market size is projected to reach 115, a 15% increase in fiscal year 2025, and is expected to double by fiscal year 2034. So it takes 11 years to double. Or should we come up with a newer one? But yeah. Yes, and then they believe that their revenue, this is revenue by the way in Japanese. So they project their revenue is going to go increase to 12 billion yen to 14 in that period. So what have they achieved? We'll check that. So, okay, so it's not 2025 yet. Okay, 12 to 14. Okay, so yeah, they are on track then. They're on track then. Well, actually, no, they're not on track. They wanted hold on, 2025, right? Okay, 2026 is 14 billion by 2025. So they're kind of slow then, but they're behind. So then they're 1 year behind right now in terms of revenue growth. Okay. I'm just gonna do something very simple for this company. Or down. Medium-term management plan. I mean, they weren't really able to execute on that. So 12 to 14, they didn't obtain that. Are they trying to revert to this goal then? 1.7 billion. Right. Okay, so they're taking the 2025 goal into unless this is fiscal year 2020. But then no, I don't think so. 11.246. Which year was double check and that as the anchor. What the happening? And it okay, my screen is frozen. That's not good. Okay, I'm just gonna restart these. Maybe I have too much document. Okay. $11.246. Okay, so this was in 2020. Okay, it's 1 year forward. No, so they are on track. Right, so this is fiscal year 2023, right? That is the case. No, they're on track. They're on track. Have different. I need to adjust. I guess 2023 then. Is that what we're doing? That one. 2023. 11.24. Ahead by 1 year. My brain is slow right now. Why? A little bit tired. Let me just double check that logic. No, it's still fiscal. I should still put this as fiscal year, right? Because that's still the accurate. But then for their projection, this is 2025. They just mean 2025. Yeah. So no, this is still accurate. Okay, just need to know that it matches. So we're still on track for that. So right. So okay, let's take a look at the so they're 14 billion, right? 14 billion, which is 140 that E, 140 E. So my question then is okay on the yeah, double check the market size real quick. Okay, number 9915 years 991 991. Okay, 991, and then we are like 0.1%. Not a lot. Not a lot at all. Market share is very low. Wait, hold on. What is this? So that would be 277 billion. They have 14 billion and 277 billion. So if you take, right, this is not even accurate. This is 12 billion. So if we take 12 divided by 277, 4% of the prime, 4% of the prime. But if you look at the total market share of all of it, yeah, so yeah, they're like 1%. They're less. They're just a little over 1% market share. So yeah. And 191. Hmm. Okay, so I'm going to focus more on orders as prime contractors. So doing larger scale urban renewal projects. So projects that cost like 100 million yen or more, I think is what it's meaning. Strengthening customer base aims to expand its customer base by attracting new customers in addition to existing customers, developers, general contractors, and users. Increasing orders for underground construction work. Pile removal, CD method, BG method, I don't know what this means. Underground damage countermeasures. Environmental improvement related construction. Anticipated increase in asbestos removal and soil contamination countermeasure construction and aim to capture a demand in environmental improvement field. Utilizing CRM. EX improvement. I don't know if that really helps with sales though. Yeah, I'm not really convinced how they're gonna continue to penetrate the market and generate a higher market share. I feel like they operate at too small of a scale. I think they need to operate at a larger scale, but I'm not sure how they can do that. Yen, 14 billion. Market is 991. They operate at 14. So it's like just over like 1.4% market share. Yeah. They call it prime demolition. Mention it as prime contractors, receiving orders as prime contractors for larger scale urban projects. Larger scale projects. So yeah, okay. Good. So yeah, as a recap, we went through today. We went over 3 companies. We weren't able to do trial holdings because that one requires more time. So I'm just gonna ignore that one. But in terms of posts, we have we have a few now. I'm just gonna clean it up on my own time, but I'll release it probably tomorrow. Add some, make it look nicer. Add some like logos and stuff. But the overall things are there. So let's review everything, right? So okay, we have Wantedly, right? Trades at pretty low multiples, has a lot of cash, which is why on a P basis it's like this. Yeah, they have high margins, 34% EBIT margin, 22% income margins, and they've already reached a level where operating leverage has kicked in a major way that allow them to have these really high and strong margins. They have an asset-light business model, right? So then they don't need to constantly spend on capex, and D&A is really low. It's really just office space and computers probably, so really high free cash flow. So their growth opportunities include just increasing member count, increasing the number of employer companies that sign up looking for talent, right? And how these typically work is that the employer companies are the companies that are paying Wantedly, not the members. Members get to sign up for free. They also have Wantedly for Singapore, so they can expand and apply their business model into other countries in Asia, right? So maybe they can create something in Singapore, they can create something in Malaysia, create something in Philippines, right? Adding additional add-ons and features to their existing subscription offerings. So currently employers have to pay, as an X amount, right? Just like a standard subscription. But then if they want additional features, probably has to do with data analysts, data analytics, that kind of stuff. Probably to pay more. Yeah, what I like about Wanderly, as I use it a little bit, was that it's way more personal than like a normal job posting. It definitely appeals to a younger generation. What I don't like, the increase in user base has been slowing, indicating marginal returns from marketing spend. Yes, so the user count could be going like this, but even though they only have like, I don't know what percentage of market share they have, but essentially what you want to see is like, accelerated growth curve, and somehow they've reduced their marketing spend, and they've also seen a slightly slower increase in user base, which is not great. The increase in companies, employers that are signing up for Wanderly is also slowing down as well, which is not good. They have a lot of cash or hoarding cash, so they need to, like a lot of Japanese companies, how do they effectively allocate that cash, right? That's the question. Yeah, and they dialed back their marketing spend, which I don't like. So additional questions we want answered. How's the company investing in its own growth, R&D, CapEx, right? Are they creating other services or supplementary services? So I know that they have like a platform for users, a platform for the employers. They also have a platform for employee perks. So once you sign up with a company, if you're a company, let's say you're a Subway, right? You can offer an employee at a certain company a 10% discount on a footlong, for example. Yeah, are they effectively using marketing spend? How are they using it? Like if your target market are younger generation looking for jobs, right? Then what social media platforms are they on, right? And are they doing that? What's the total number of members they could penetrate? What's company Japan's labor pool? So this is information that you can find. Gives us an idea of, based off of the number of members that they have, what is their market share, right? What does the hiring platform market look like? Are there a lot of generalist hiring platforms or a lot of specialized ones? Because I saw that on their platform, and like a big chunk of their target market are software engineers, right? That took up a huge chunk in like a lot of working professionals, right? But then I heard in one of my live streams that one viewer brought up is that there are these other platforms that specialize in certain job types, and one is definitely the tech sector, right? That's probably where companies are willing to pay the most to hire good talent, is software engineers. Next one, Nihon Falcom. So they make the the JRPG video games, the YS series and the Legend of Heroes. So really high EBIT margins, very lean. They only have like 60 something employees at their companies. Crazy low. So EBIT margins 50%, income margins 34%. Stable and stagnant revenues at 2.5 billion yen. So loyal fan base that enjoys IP and returns for new releases. But the thing is, they only have two major IPs, and their revenue has been stagnant for a very long time. It hasn't been growing. Yeah, so growth opportunities, new IP being established, Tokyo Xanadu. So this is they're having a new, and the thing about this one is that it's a Persona competitor. So Persona is a game that's based off in high school, right? So Tokyo Xanadu is also based in high school, so potentially they're trying to make a competitor for Persona. Potential third IP basically. So releasing their title to more game consoles, PS5, Switch, and across PC across platforms. What I don't like, potentially over-reliant on their two major IPs. So what they're doing is working, right? Their two titles are printing money and is really good. But the thing is, I think they're kind of just resting on their laurels, or that they're just kind of just letting, cashing in and milking this cow as much as possible. And by not creating new IPs, I feel like they have so much potential to grow. They have so much potential to allocate their cash in a way that it can increase sales. But no, they're just like milking these two series as much as possible. And the thing is, if they were to, so they have a small team of 66 employees, so they don't really have excess labor capacity to create another popular IP, right? So like, yes, they can make Tokyo Xanadu, but then this is like a multi-year project, right? Kind of thing, right? I think they should be more aggressive in hiring and building a capacity to expand or develop new IP, because like 50% EBIT margin is really high, right? So you're basically giving the government 16% of your margins away. Whereas like if it's the Amazon model, right, you would just spend substantially a lot of money to get your net income margin as low as possible, so you can pay as little tax as possible, right? But that's not what they're doing. They're just like, okay, we have 50% EBIT margins. Let's just enjoy that, right? And let's pay out of our asshole a lot of taxes to the government, which I don't agree with, because they should be investing into the company to build more titles. Essentially. So how can they further grow revenues? How can they create more IP? How can they be how could they get bought out, and by whom? So family or owned, 60% pre-founder Masayuki Kato passing away in December 24. The company is in the process of dealing with the inheritance situation. So even with a 55% inheritance tax, the company's post-passing ownership would still be exceeding 50%. On the surface, if the heirs want to continue controlling the company, it would be difficult for 3723 to be acquired. Yeah, so if the heirs Kei and Shokato don't want to run the business, or they could sell the company. Has management ever discussed corporate governance, dividends, buybacks, and creating other segments? Yeah, so they have so much cash, they don't really have a place to use it, and I feel like this is just their family is going to keep milking this company to the future, right? Which is kind of sad. But what's good is that the CEO of the company is not one of the children. The CEO of the company is a person that worked his way from the ground up in the firm, and so he's been in charge of a lot of game projects. Okay, 4380 Mart. So Mart is essentially a e-commerce platform marketplace, right? Where people in the food and beverage industry and restaurant industry basically go on the marketplace and sell their products and goods and at a discount, pretty much. And so buyers get savings, and then sellers get access to a large pool of potential buyers. So EBIT margins are really good because they just create a marketplace, and essentially they charge two main types of fees. One fee is like a virtual storefront cost, right? So by opening your storefront online, you have to pay like a fee to do that, and then you have a variable fee, which is like a revenue cut. So if let's say you sell salmon on there, right? I think it's 2% rate off of the price of the salmon is given directly to this company. Yeah, so the company has carved out its own niche and has a first mover advantage, and has created a platform that's the go-to for 230K buyers and 2.1K sellers. Sellers pay to create a virtual storefront and may earn a commission on. Oh, this is supposed to be pay a commission on complete transactions. Growth in the sellers was slow in fiscal 2024 before increasing 28% in fiscal 2025. Did Mart reach a critical mass of buyers where no sellers are willing to market themselves on the site? Yeah. Where now sellers are willing to. Yeah, that's what I don't know. I found it interesting that the number of sellers would increase so much in such a short period of time. Then yeah, that's a question that needs to be asked, basically, if you want to invest in the company. What I don't like, growth in buyers has been growing at a decreasing rate. Over 50% of the company is owned directly and indirectly by Sumio Murahashi. The company will be managed. For Sumio or their family's benefit, potentially. Yeah, 2.2 billion yen of cash sitting on the balance sheet. Additional questions we want to answer. The company has 1,636 sellers in fiscal 2024 and increased to 2,098. How did the number of sellers increase by 462 in 1 year? Yeah, how can the company grow from this stage? Can it grow horizontally? How can the company effectively allocate cash? Who are the competitors that have created a competing product, and what is preventing them from taking market share from Mart? Would the Murahashi family be willing to sell the company? This one is Genova. Genova is has to do with like the satellite positioning technology, right? So yeah, so they're highly profitable. 55% EBIT margins, 38% net income margins. They're not that like deep value, right? They're still created like growth multiples, and the reason why is because well, we'll go over that. So existing contracts are increasing, and new contracts continue to accumulate. So they currently have 9,162 contracts. Their cost structure are mainly fixed, right? Because they purchase data from cores. I forgot exactly what this stands for. And then their usage fees and their maintenance fees are all fixed. So anytime they have a sale and they have add on a new contract, is basically, very, very high margin. So fixed costs are fixed, and very little variable costs, leading to operating leverage essentially. There's many use cases and applications for Genoma's location technology. So eye construction, remote construction, smart agriculture, drone, and autonomous driving. There's probably more than that. They recently had a business partnership with KDDI. Sorry, I have an appliance that just making noise. Yeah, so business partnership with KDI to expand application to drone surveying, drone delivery, and mobile as a service. So yeah, so these are things, because I was wondering, they mentioned all these use cases and all these markets that they can penetrate, but which ones are they actually going to? So it seems like the drone application is one that is coming up right now for them, or there's something that's something they're going to work on. Company has a large TAM and can go in many directions, hence the growth multiples. What I don't like, so it seems beyond my current circle of competence. I don't know anything about positioning and land surveying, that kind of stuff. So the land survey, there doesn't seem to be much progress made in the other use cases. Additional questions we want to answer: how much do they spend on R&D? For the competitors, do they have a moat, IP moat? Do they have a patent? They do have a patent. We know that. Genova has been in business for 20 years. What kind of applications do they try to expand into? What has been their speed of execution? Can Genova live up to its potential? Can they be bought out? How exactly does tech work, and how unique is it? Right? Like, we know, like, Tesla owns a lot of satellites, right? Well, what makes this company unique? I still don't know. 1450 Tanakin. So essentially they do demolition for construction. There's a huge tailwind for that for sure. Japanese market is a market where people are constantly demolishing old buildings and building new ones because no one wants to renovate older units. It's just too much of a hassle. So cheap multiple, 4.6 times EV EBIT. PE is a little high, but it's because they have a lot of cash. Decently profitable, EBIT margins 50%, income margins 10%, right? Like a lot of companies in Japan are single digit multiples, sorry, single digit margins, right? So the tailwind is increasing demand for demolitions in Japan. Demolition market is expected to double by 2034. So essentially, concrete buildings in Japan last anywhere between 40 to 50 years. So how they kind of came up with this extraction is that with a 5-year moving average on property data 40-50 years ago, the demand for demolition is going to double by 2034 essentially. So yeah, but we don't know whether the way that they calculate it is reasonable or not. We just kind of have to trust that figure in a sense. But for the next 3-4 years, the way the graph is kind of portrayed is one that is more flat. Actually, I should probably just include it anyways. Kind of valuable. So I'm just going to copy that in. Okay, this is their 10-year plan. My caption. So this is from their 23 10-year plan. Is IP investor presentation. Okay, so there's a large market share upside. Heineken only makes up 1% of the total demolition market. The total demolition market is in 2023 was 991 billion, while companies' sales were 11 billion. The prime contractor demolition market is worth 277 billion and is expected to continue growing. Yeah. So, but another thing is that this is a highly competitive market, so it's not that easy to kind of take up. It's just that because we're small, we have a lot of upside and be able to outcompete, either roll up and buy other demolition companies, which could happen, which would be very interesting. That would be a question. Botanican take on a demolition company roll-up strategy of acquiring other demolition companies with excess cash. Excess cash on balance sheet or taking on debt. So I don't like, they have large cash pile, 4 billion yen of net cash. No debt. Lack of immediate growth opportunities within the firm. Highly competitive market with 60,000 firms in the demolition space. Most demolition companies handle small projects and generate less than 10 billion yen of sales a year. Scales perspective, Anakin is one of the few large-scale demolition companies. So additional questions we want answered. What efforts can Tanakin make to capture more market share? How can the company take on more large-scale projects? How can Tanakin effectively allocate cash? Are there any verticals or horizontals that Tanakin can invest in? Could Tanakin take on a demolition company roll-up strategy of acquiring other demolition companies with excess cash on balance sheet? Yeah, so 1, 2, 3, 4, 5. Oh, 5. 5 stock ideas. Yeah, good. So yeah, that's pretty much it for today. Thanks for tuning in, guys. Today was one of my longest streams. It took like almost 6 hours now. Appreciate you guys for tuning in, and yeah, catch you guys next time. Oh, and don't forget, to like and subscribe and follow me on all my platforms: Twitter, Substack, and of course YouTube. I'm trying to, generate as much subscribers as possible. I'm trying to get to 1,000, in record time. So if you guys can, assist